Ladies and gentlemen, good day and welcome to the Xpro India Limited Q4 and FY23 earnings conference call. As a reminder, all participants' lines will be in a listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and 0 on your touchtone phone. Please note this conference call is being recorded. This call may contain some of the forward-looking statements, which are completely based upon our beliefs, opinions, and expectations as of today. These statements are not a guarantee of our future performance and involve unforeseen risks and uncertainties. I now hand the conference over to Mr. Bhaskar, Managing Director and CEO. Thank you, and over to you, sir.
Thank you. Good afternoon, friends. I extend a very warm welcome to all participants to this Q4 and FY23 financial results discussion. I introduce myself as C. Bhaskar, Managing Director and Chief Executive Officer of Xpro India Limited. Today on this call, I have with me Mr. Vinay Kumar Agarwal, our Chief Financial Officer, and Mr. Kamal Saboda, our Company Secretary. I am particularly happy to have the attendance of our Chairman, Shri Siddharth Bedi, who wishes to hear your views and our interactions firsthand. Also present is Mr. Himanshu Bakshi, our Senior President and Chief Operating Officer. Orient Capital, our investor relations partner, is coordinating this session. We are continuing the practice which we started last year of hosting an annual conference call for our investor community with the intent of keeping investors and analysts familiar with and updated about our annual results and relevant major developments. We have had opportunity to meet some of you at our earlier calls or at the AGM or otherwise, and so I shall not dwell on basic introductions to our company. We are transparent in our approach, but I must state that all discussions here will be within boundaries reasonably imposed by our strategic and competitive position. As you are kindly aware, Xpro India Limited is a diversified, multi-divisional, multi-locational company focused on polymer processing with strong governance standards. The company is family-led and professionally managed, an arm of India's largest and most reputed industrial house, the Birla family. We currently have our manufacturing facilities in Greater Noida, UP, Ranjangaon, Maharashtra, and of course, Barjora, West Bengal. Our operating units have built up special skills and competencies in the specialized field of co-extrusion with application in the manufacture of oriented films, multi-layer plastic sheets, and multi-layer cast plastic films. Thermoforming supports our downstream operations for sheets. Our results for FY22-23, together with the quarterly results, have been uploaded on the stock exchange portals, and you may have had an opportunity to go through the press release, which we have also uploaded on the exchanges and on our website. Coming to a quick review of key business matters, 2022-23 continued to see the global economy in a state of flux. The outlook remains at best cautious, persistent inflation risks have resurfaced, and financial markets may need to price in tightening while keeping an eye on systemic risks. The Indian economy stands out as one of the fastest growing economies following pandemic-induced shocks. Of course, a broad range of risks, including inflation and climate, for example, monsoon-led, remain. To push growth, government is encouraging private capital investments to also drive employment, demand, and productivity. India expects to grow at a moderate 6 to 6.5% in 2023-24, while the global economy could achieve probably only a 3% growth. Coming to our performance during Q4, and of course the year 2022-23, I am happy to state that the company continued to deliver overall strong performance, reflecting our manufacturing and marketing capabilities and our strong track record as a key supplier to both the white goods and dielectric segments. The dielectric film line at Biax division delivered a healthy performance with near full capacity utilization and a continuing shift towards thinner films, balancing the product mix with market opportunities. We remain the most significant Indian manufacturer of high-quality dielectric BOPP films. With own development capabilities, we stand established and compete with imports from multiple suppliers in China, Japan, South Korea, and Europe. Our exports to USA and Germany sustained well. Excitement and growth in the EV segment and non-conventional energy segments also augur well for the range of the company's competencies and products. Consumer durables, including refrigerators, the main client base for Coex division at our Ranjangaon and Greater Noida plants, faced difficult market conditions in the last quarter and generally after a strong first quarter. One may expect renewed demand for white goods in coming periods. We continue to be the leading supplier of sheets and liners for refrigerators of most leading brands. The white goods industry in general holds good and long-term potential and interest of global players. Now considering the Q4 performance. Revenue from operations was rupees 124.27 crores against rupees 142.8 crores in Q4 FY22, registering a value degrowth of 13% on a year-on-year basis. Raw material cost increases could be passed on, and improved product and customer mix improved value addition, and accordingly EBITDA at rupees 19.3 crores was 11.8% higher. PBT for the quarter at rupees 15.23 crores was higher by 16.2%. Biax division reported a revenue growth of almost 25% to over rupees 45 crores in Q4 FY23 as compared to the around rupees 36 crores in Q4 FY22. We continue to see sustained domestic demand for Xpro's Biax dielectric films with our market share at over 30%, with the balance being substantially met by imports. Coex division markets, however, were dull in Q4 due to muted growth, particularly for refrigerators due to a weak summer and stocking from earlier quarters. Key players worked on cost and price reduction. Coex division revenue was rupees 79.2 crores against rupees 104.3 crores, down by 25% year-on-year, reflecting this scenario and also in the light of the very high delivery in Q4 2021-22. Now coming to the full year performance FY23. There were many new landmarks for the company in the year gone by. Consolidated revenue from operations during the year grew by 8.3% year-on-year to rupees 510.97 crores, up from rupees 471.72 crores in 2021-22. I am happy to also record that this is the first time the company has crossed a revenue of 500 crores, which is another new benchmark. Revenues from the Biax division during the year grew 23.6% to rupees 159.75 crores as compared to rupees 129.21 in the previous year. Revenues from Coex division were higher too by 3.7% at rupees 346.13 crores as compared to rupees 333.68 crores in FY22. Revenues from export, however, were lower at rupees 17.46 compared to rupees 22.62 crores in FY22. Interestingly, exports of the Biax division were higher by about 6%, while Coex division exports were lower, mainly due to disturbed economic conditions in Sri Lanka, one of our major export markets for Coex products. EBITDA was higher by 16.6% at rupees 74.4 crores against rupees 63.8 crores last year. Our EBITDA margin for FY23 was 14.6% as compared to rupees 13.5% last year, reflecting our continued drive towards value added. Interest was lower at rupees 7.53 crores against rupees 13 crores last year, and after depreciation, PBT was higher by 45.9% at rupees 59.23 crores against rupees 40.59 crores last year. Accounting for deferred tax assets and liability, which importantly has no impact on either operating profits or the cash flow, resulted in a marginally higher profit after tax of rupees 45.36 crores during the year against rupees 44.93 crores last year. In the context of deferred tax assets and liabilities, we had to make a provision of rupees 14.11 crores this year against the reversal of rupees 4.55 crores last year, reflecting essentially a swing of 18.6 crores. Overall debt reduction during the year was rupees 63.97 crores against rupees 45.87 crores last year, including through prepayment of domestic loans and our external commercial borrowings. It is promising that all long-term loans, other than for working capital application, stand repaid at the year end, and in fact well before the committed schedules. For FY23, the net debt to equity stood at 0.04 and delivered a healthy return on equity on the expanded capital of 22.4% and a return on capital employed of 27%. The board has recommended a dividend of rupees 2 per equity share on the expanded capital following the issue of bonus shares. Some other important developments. Pursuant to shareholders' approval at the last AGM, the company allotted a little over 59 lakh bonus equity shares on the 6th of July 2022 in the ratio of 1 equity share for every 2 held on the stipulated record date. As required, a further 9.84 lakh bonus shares were reserved for warrant holders for allotment upon their acquisition or conversion of the warrants into equity shares. The promoter group holders of convertible warrants have exercised their option in full ahead of the due date, reflecting their confidence in the company, and have been allotted equity shares and reserved bonus shares thereon. A total of 4,92,000 equity shares, including bonus, but that's allotted. The equity capital of the company now stands at rupees 18.21 crores with material addition to reserves on account of the securities premium. Last year, we announced the intent to significantly expand capacity for dielectric and other superior grades of our BOPP films. The first phase aims to double capacity at the existing location at Barjora, to be followed by a second phase at another appropriate location. These were expected, as stated last year, to take about 2 to 4 years, taking into account long key equipment delivery periods, the critical path for this investment. At this time, we are happy to affirm that management has taken many effective strides for implementation of its blueprint, starting with securing supply of 2 state-of-art manufacturing lines from reputable suppliers. The first line is to be installed at Barjora and is likely to start contributing in FY2024-25, and the second line is expected to do so sometime in FY2025-26. Shareholders and other investors will be pleased to note that this is in line with the 2 to 4 year estimate which we had originally stated in our annual report for 2022. These new lines each represent the largest investments undertaken by the company. The expansion is expected to enhance our domestic first mover advantage, besides helping achieve a globally worthy capacity and market standing, and even greater credibility as a supplier of state-of-the-art Sorry, I had a little blip. As a supplier of state-of-the-art dielectric film products and intelligent solutions. The board also approved investment of up to INR rupees 2 crores towards 26% equity in a SP with Tata Power Renewable Energy Limited for sourcing solar energy for the COEX division at Ranjangaon under captive open access mode from a 3.125 megawatt, approximately 4.5 MWP facility being set up. Utilization of this lower cost energy is expected to commence in early 2025 and would naturally translate into direct savings. The sale and transfer of the erstwhile Unit 1 at Barjora, manufacturing packaging grade BOPP films as approved by our shareholders in FY19-20 was completed on 20th October 2022. We had continued transitionary arrangements, including toll manufacturing at this unit on account of the acquirer till the date of transfer. With this, I open the floor for question and answers. Thank you so much.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. We will wait for a moment while the question queue assembles. Ladies and gentlemen, to ask a question, please press star 1 now. Take our first question from the line of Pradyumna Chaudhary from JM Financial. Please go ahead.
Hello, sir. So I have a few questions. The first one being, I just wanted to understand, I believe there are certain other types of capacitors as well, apart from dielectric film capacitors like glass and ceramic capacitors. So could you give some sense on where these are used and which particular industry prefers, like certain application-wise, which one is the most widely used, and whether there's any threat to us because of these other type of capacitors? This would be the first question. Also, just wanted to understand if there's any import duty or any other sort of duties on capacitor films, imported capacitor films. And thirdly, are you witnessing any firms outside of India, like from China or other countries, planning to set up their plants in India for the dielectric film? And lastly, a bookkeeping question would be the effective tax rate going forward, like any sense on that, because there's been some reversal as you mentioned in your commentary. So yeah, that's it.
Sorry, I didn't get your last point.
So, what would be the effective tax rate going forward?
Okay, interesting. Okay. First point, let me take very easily, and I must clarify to you that we are a manufacturer of polymer products, and we make dielectric films for the dielectric capacitor film industry. Therefore, it would be absolutely out of place and out of context for me to comment on application of glass capacitors or ceramic capacitors or any other type of capacitors. Let it suffice to say that each capacitor has its own application. There are film type capacitors and other types of capacitors. Now, our focus is film type capacitors. Each type of capacitor has its own dedicated application. There could be very loose borders of interchangeability, but they are not designed to be interchangeable. Also, let me add that within the film type capacitors, the polypropylene film type has the largest share within any kind of plastic film based, and in fact, the share of the polypropylene in film type capacitors has been going up year on year. So that's one. Your second question was, sorry, I seem to have mixed up. Before China, you had another question?
Yeah, so second was, is there any sort of duties on imported capacitor films currently?
The government of India has a very clear policy of encouraging the electronics and electrical infrastructure industry. Towards this end, a few years ago itself, they had reduced import duty on most input products for the electronic components industry, and therefore one of the items was dielectric films. So today there is no, last few years, there has been no import duty on the dielectric films. Interestingly, you must also note that we are able to stand on our own feet and compete in this circumstance very well too, as we have been doing for the last few years. Your next question was China or anybody else. We have not thus far heard of any major capacitor player looking at coming into India. A few years ago, we had ourselves set up a joint venture with one of the European players in India. Unfortunately, their own circumstances in Europe at that time had turned not so happy for them, and we bought them out actually. So today there is nobody else who's seriously thinking of doing a JV in India that we are aware of. Someone might be working at it and we are not aware of it, but we haven't heard of anybody. And effective tax rate, we have a little bit of tax shield still left,
for another 23,
which is about another 23 crores. After that, we would be subject to income tax under the new regime, which we have also opted for. However, once we start our new projects, they go on stream, obviously we will be getting new shields. Next question, please.
No, that's it. So thank you so much, especially your point on no duties being there. So us being able to stand on our own is really encouraging. All the best.
Yes, sir. I think that is the point. I think I would request all of you all to appreciate, even if I'm asking for self-praise or praise for my company. But the fact is we have faced the onslaught of imports quite well, and not only on price. You were raising only price. I think it's equally important that I must say, notwithstanding the fact that others can offer material free of duty, for many products we are costlier than the imported product, and the customer is quite happy with it too, which must speak of quality and performance characteristics. Thank you.
Thank you. We take the next question from the line of Srinath Krishnan, an investor. Please go ahead.
Thank you. Congratulations to Mr. Bhaskar and the entire team, and nice to see the journey that you have had in the last few years. Sir, globally there are very few dielectric film manufacturers. What are the challenges in manufacturing these films? And you spoke about mix improvement in the dielectric film division as well. Can you please highlight on the same? Thank you. Thanks a lot.
Thank you, sir, and thank you very much for your compliments. We value the support of all investors like yourselves and the others on this call today. Coming down to your specific query, over the last few years, we have developed the complete range of products that are required for various applications within the dielectric film segment in India. Now, when I talk about product mix improvement, it comes from two dimensions. Dimension one is tailor-made, specifically customized products to meet specific customer requirements. Now, you will appreciate, Mr. Krishnan, that I cannot go into the details of those. Those are technically, stringent and under strong non-disclosure clauses with my customers. But suffice it to say that we have developed products to meet specific high performance requirements by customers, and that's point one. So that is a value-added increase direction. But another direction, which I can talk more about because it's not so confidential, is the change in mix. Now, when you come to capacitor dielectric films and capacitor films, one of the major physical characteristics is the thickness of the film. And the film is going thinner and thinner, especially as the markets switch to capacitors for more rigorous and new applications. By new applications, I mean things like the EV segment, the non-conventional energy segment, and of course, the eternal drive towards miniaturization. Now, the price differences are dramatic. You could have price swings between, say, for example, 400 rupees a kilo for a thicker film and going down to, say, 1,500 or 1,800 rupees for a really thin film. So the thinner you are able to make, you are able to cater to new markets and you are able to improve the value additions. And this has been our drive regularly, consistently for the last few years, and we continue to do a lot of work in this direction. Does that sort of answer your question, sir?
Definitely, sir. Thanks a lot. This is very helpful. Good luck for future as well.
Thank you so much.
Thank you. Ladies and gentlemen, in the interest of time and fairness to all participants, kindly restrict questions to per participant. If you still have more questions, please join the queue afresh. We take the next question from the line of Keval Ashar from DSP Investment Managers. Please go ahead.
Hello, am I audible?
Yeah, perfectly, sir.
Yeah, thanks a lot for taking my question. First of all, congratulations, sir, for a good set of numbers in FY23. My first question is, since we see such a huge demand in coming years for dielectric capacitors and capacitors, what are the entry barriers because of which there are very few players? In India, only Xpro, and globally also very few players.
You're right, sir. There are, fortunately, if I may add, on the lighter side, there are many entry barriers in this segment. The first and the most obvious one is the high capital cost and the relatively lower turnover to capex ratio. Now, that is, of course, a given. But more important, and what is practically important, is the technology, the process parameters, the handling capabilities. In fact, the mindset is important, and taking, and there's a long time to development and commercialization of a product. It takes a very long time. And most important, very long lead times in equipment delivery. Equally important, there is nothing called a standard off-the-shelf line. So your machine has to be designed for the way you want it and with the special characteristics that you want to build into it. Now, as it happens, you could theoretically go and just buy a line and you will make a film. But whether it is the film that you want is highly questionable. And these are all the barriers to entry. Certainly, we also face the barriers, but we entered in a small way and we learned the hard way, modifying a line, taking time to develop. And now we have the advantage of the early entrant into the Indian market, and also the fact that when the Indian market was hesitant to use an Indian product in early, say 4 or 5 years ago, we used that time to develop our global market, focusing on few internationally established players, customers that is, and who were very, very choosy about what they wanted. So we learned a lot from them also. So if there are many barriers to entry, it's not as easy as it looks. You know, it's not like making milk film. You put in dana and you get a film that you use to pack milk products, right? For example.
Understood, sir. So the next question is, sir, what is the total demand in India for capacitive films in terms of volume?
In terms of volume, the demand for capacitive films, I'm talking about base films. I'm not talking about metallized films because we are not metallizers today. But if I take base films for a couple of major applications, for the main applications, including what's called AV film, I would say it's about 15,000 tons, give or take, in that region.
Okay, sir.
Per annum, that is. That is, incidentally, friend, that's another, answering an earlier question, that's also one of the barriers to entry. People who are very good at making, say, packaging films, each of their lines turns out 80,000 tons a year. And then when you have a line that turns out for 5,000 tons a year, it feels very different, and it needs to be handled very differently. So that's the real state.
Understood, sir. And sir, currently, what would be the realization for our BIX division? If you can throw some light on that.
Well, you've asked a very tricky question, which is possibly wrong for me to answer on a call like this, especially when it's strongly competitive. However, let me tell you that the average realization, if there were any such meaningful numbers, would be in the range of 450 rupees a kilo without any taxes included.
Understood, sir. And this improves, right? With us going for the thinner micro.
And let me add, putting together two questions, the question a friend asked earlier also, our value mix change has actually led to this price going up year on year in the last few years.
Okay, sir. Got it. And sir, in the past trend, do we see much volatility in the realizations, or is it more of a structural thing for BIX films?
See, volatility, there would always be price variations, right? I mean, let me put it to you that way.
Okay.
Now, one of the major causes for price fluctuations are input costs. There are polypropylene, like all polymers, is a petrochemical product. So there are bound to be petrochemical related price changes. Those kind of price changes are pass-ons. They do not very, very significantly influence price, but it does.
Okay.
If your question is geared more towards like for like, are there strong value-added swings? We actually see like for like value-added a fair bit of consistency and stability going forward.
Understood, sir. So, sir, if I got it right, is it a cost plus basis kind of pricing we have with our customers?
You know, let me put it this way. If I take my coax business, which is almost commoditized, there it's a straight cost plus.
Okay.
Here, I will not say it is straight, but it's well indexed, and it's and it's indexed in a very balanced way. So a swing of 1 rupee would not make a difference, but any material swing would translate to a price change, amounting to near pass-through pricing.
Understood, sir. Understood.
And I know I'm probably sounding confusing, but I think I wanted you to understand that it's not a straight pass-through, but pretty close to a pass-through.
I understood, sir. And sir, just last question, if I can chip in. You would mention that there's also one entry barrier where the delivery time for the machines is longer duration. So now, if we see higher demand and if we decide to do a capex now for further expansion, how much time would it take us to get the machines delivered?
Typically, if you wanted a good machine and you decided today, or let's say you went to a machinery supplier today knowing what you wanted. I mean, it's also important to know what you want, right? So if you knew what you wanted today and you went to a machinery supplier, you'd probably say something like nearer 3 to 4 years actually inching towards 4 years.
Got it.
Rather than 3.
Understood. Sure.
You will recall, if I'm not sure whether you've attended any of our calls earlier, but you will recall that I had mentioned that way back when we had decided and we didn't want to share our specs with anybody, and there was a queue, we actually booked space.
Okay.
So that's, I mean, unless somebody has booked space already, he's not going to be able to get it earlier than what I'm saying.
Got it, sir. That's it from my side.
That's a reasonable comfort, because if it's a new player, he'll have to get it, then there's a stabilization time, he has to understand what on earth dielectric films are all about. So that's why I say there are reasonable barriers to this entry.
Okay, sir. Got it.
And over and above that, once he gets a line, someone who doesn't know what he's doing, there will be testing, stabilization, burn-ins of the line. All that adds to time, really speaking.
Thank you, sir. We take a next question from the line of Pranay Roop Chatterjee from BCMPL. Please go ahead.
Hey, good evening. Am I audible?
Yes, you are, Pranay. Please go ahead.
Okay. My first question is regarding your BIAX division. You had a top line of 164 crores in FY23. Is it possible in simple terms to divide this revenue in terms of the end users? It will help us better understand which parts your business is getting into right now.
I fully appreciate your question and your interest in that breakup. However, let me say that, although we do get involved with the capacitor manufacturer's business, whatever they share with us is on a strict confidentiality basis and a non-disclosure basis. So I know that I'm supplying, say, capacitor film to capacitor manufacturer X. We may know what he's using it for, but we are not supposed to know what he's using it for. So to that extent, you'll appreciate I can't share that information.
Okay, so I'll tell you what I'm trying to achieve here. The fact that I have right now is you have 164 crores of top line, you have 20-30% market share, and from the numbers you gave me, volume and realization, it seems like... 30%,
just to clarify.
Correct. So it seems like the market is around 700 crores in India, right? I'm just trying to understand, if the market is 700 crores, you have already touched 165 crores. Where will growth in this market come from? Like one possibility would be the EV application, but I'm not sure how large that pie is in the overall capacitor space, right? Because you say you don't know.
Let me tell you, what are we chasing? We are all obviously chasing market expansion, and we are chasing the capacity. Now there are two things. If I take India today,
right,
even considering the actual domestic requirement with a little bit of export, India today needs 4 lines of the kind we have.
Okay.
And we are far from having 4 lines in India today yet. So the first target for us is to reduce import dependence.
Okay.
Target 1. Target 2, the current volumes have something like a natural growth rate. Remember, this is including infrastructure and electronic components, both thrust areas, including the PLIs which are expected for them. In that case, it's expected to have a growth of anywhere between 8 to 10% per annum conservatively. And this is for conventional applications.
Okay.
Now, over and above that, you've got 2 segments which are sunrise. Now, those are the EV and the non-conventional energy. Elsewhere in the world, the EV requirement and the non-conventional energy requirement are actually driven by the carbon dioxide question, and that is creating huge demand for these films. Just to give you an example, in Japan, there's a very major player. That player's effective capacity has gone down simply because he started supplying more and more to the EV business, which is thinner film and therefore more valuable film. By valuable, I mean it's pricey, it's higher priced film.
Okay.
Other than this, now in India, actually, both these applications, the EV and the non-conventional, are driven by economics. I'm not sure whether I would go and buy an EV car because of the carbon dioxide concept.
Correct.
All really are yet. But I would probably go out and buy it because it's cheaper to operate. So economics is driving both non-conventional energy like solar and the EV business in India. And wherever it has been mandated, the market growth has been fairly strong, as you might have seen, sir.
Okay. So,
just to give an example, UP sort of mandated that the auto rickshaws should be EV, should be electric. Almost all new auto rickshaws are electric in most of UP today. There's a huge growth in that segment. So and probably there will be more mandating in this segment. And of course, all of us are chasing solar power, for example, including our own company. We are also looking at solar surely from a cost-saving economics also, incidentally doing good for the for environmental considerations as well. I hope that answers your question, Pranay.
That is perfect. From what I'm capturing from you is 8 to 10% organic growth, and then some amount of shift import substitution that could add maybe 2 to 3%, and then new sunrise sectors or new applications coming in that could also drive some growth. So it's possible. It would be a fair statement to make that 15% could be a broad baseline number for the overall market going forward. Would you agree with that?
Sir, with due apologies, I will think that you are understating growth potential if I were to take a 5-year perspective. I mean, if I were to take a 1-year perspective, probably your 15% and all are reasonable assumptions. But if I were to take a 5-year perspective, both and more capacity is available in India, the import substitution will not be another 2-3%. It should be another 30% straight per line, one. And also the alternate applications, as more and more product development happens in India of the EVs, of the manufacturer, I think that growth could actually be far more exciting than what we are thinking of.
Got it. Perfect. Thanks. I'll get back to you.
Thanks.
Thank you. Ladies and gentlemen, kindly restrict questions to 2 per participant. We take next question from the line of Rohit Balakrishnan from iThought PMS. Please go ahead.
Hello, am I audible?
Yes, you are. Please go ahead.
Yeah, good afternoon, sir. Sir, just on this capacity expansion that we're doing for the biax. So the first phase you said is 2 lines. The first line will come in FY25 and the second will come in FY26. Is there any, what is the total outlay for this first phase, and are we also taking any debt for this?
Okay, let me put it to you this way. The first phase should be about 500 crores or a little bit over that. I'm not going deeper into that number at this call, but these are indicationals. B, I think as far as debt goes, our debt would be restricted to ECB to the extent of supplier credit available for the lines principally. That's what we are working on at this point of time. There could be bridging requirements fundamentally because, if I just take these 2 lines, the GST payout on each of them would be something like 30-40 crores. Now, that means on 2 lines it's 75-80 crores, right? So now, although that's coming back, it's not on my project cost, so to say, but that's funding that we would require. So we are fine-tuning the requirement, although we are fairly far ahead on the project implementation. Intention is to keep debt very, very low to the maximum extent possible, fundamentally bearing in mind that we've just turned debt-free. Just turned long-term debt-free.
Sure.
So we sort of explain what you want to know?
Yeah, so just one clarification on this, sir. So we raised around 150 crores. You're saying, and you generated around 80 crores this year. And I think we can generate around something similar, assuming. So essentially you're saying a significant portion of this 500 crores over the next 2 years would be done through internal accruals and only a minor portion through debt. Is that the right understanding?
That is the idea. As I said, excepting for ECB on supplier credit that's available, on the machines itself when they come from Europe. Just to highlight what I'm trying to say, typically supplier credit is available from European suppliers, there's a Hermes backed, that kind, which is typically at a very fine rate over Euribor. I must tell you that we've already negotiated. I'm not going to specify the rate. You will appreciate it's relatively business confidential, but we have rates which are well below 1% over Euribor. Now, Euribor today is a little over 3%, depending on the duration that we're looking at. But if I take, say, for example, the last 10 years, Euribor has almost consistently been negative. So you can see the fine interest rate that you are able to get the money at. Even if you take into account the cost of forex covers, it works out crazy not to utilize the ECB possibilities, and which are coming through supplier credit.
Understood.
It would make sound financial sense to utilize it.
Sure. Sorry to push you on this, but would you have a rough sense on your peak debt in that sense? Plus minus whatever, 20%.
Sorry, I missed that.
Any sense on the peak debt that you, including the supplier credit and everything? Just a broad reference to get a sense how much you would sort of take as.
Let me give you the maximum extents that I can get. I'm not telling you what I'm going to draw. I'm going to tell you what the maximum extents, right? So on European machine supply from reputed manufacturers, the typical supplier credit is up to 85% of the base cost of the equipment. So say, for example, each of these lines costs 15 million euros. I could get on each of those lines up to 85% or 15%.
Got it. Understood.
Not that I may utilize the 85% of 15 million, but that's certainly a rain check I will keep available with us.
Right. Understood. And my second question was, sir, for now, till the line comes in FY25, how do you see growth in buyouts? You mentioned that we are almost at peak utilization. So how does the growth for the next year or so seem to be in this segment?
Okay, let me tell you very honestly, if you had attended some of my calls maybe a year ago, I would have even that time said we were capacity choked. We've been capacity fully utilized for the last 3+ years, and our effort has been towards maximizing whatever we can towards tweaking lines, and then as we are now, maximizing the value added, even if we have to produce a little bit less volumetrically. So therefore, there's very little that we can do today by sheer volume. We did look at the possibility of sourcing some material, but we found that when you're a superior material supplier, getting in material from somewhere and trying to and putting it along with my material would only have resulted in hurting our brand image rather than getting any advantage through higher volume in the interim. I'm talking about trying something like a seed marketing. So we are not. And therefore the focus is to expedite to the maximum extent the line possible so that we are in the market as soon as possible.
Got it. So you expect...
Sorry to interrupt, Mr. Balakrishnan. I'll come back to your question queue. Thank you. Take a next question from the line of Hiral Desai from Anivet PMS. Please go ahead.
Hi, Bhaskar ji. How are you?
Very well. How are you? I recall.
Good.
I think last call. Yes, sir.
Yeah. So I had a couple of questions. So if I look at the FY23 performance for us, I think broadly for the full year it looks fairly reasonable. But if I just call out the H2 performance, both the revenues and EBITDA are down YOY, and obviously predominantly because of the pressure on the coax business. So just wanted to get some sense on how do you see coax over next maybe about 12 to 18 months, because clearly that space from a volume perspective seems to be under a lot of pressure.
you're right to the extent that COEX during the last year was under pressure because of the white goods business, and white goods refrigerators is the single largest customer segment. So I will not disagree with you at all. I'm sure you're all also monitoring the white goods manufacturers, for example, Whirlpool, who I think had their results sometime last week only. And you would have seen the statements that they made about the difficulties and the pressures they were under. And I'm only quoting what I read in the press release that they had given. But that said, I think the market is looking up. Volumes are certainly going up, and there have been some swings in market shares within refrigerator producers. As you know, we supply to most of them, but not all of them. Probably on a public call is not where I should say whom we supply to and whom we don't, but we don't supply to one major manufacturer, as anyone who's attended smaller calls would have heard me speak more about that. But that said, that player is doing the best in the country today, volume-wise. But this swings quarter to quarter. You know, if some refrigerator guy does very well in quarter A, they work all out, and before quarter C, there's a change in that ranking. Now, any change in this ranking is to our benefit, reasonably. So I would see that there would be change. Now also two things. I think the difficulty that segment faced last year, one of the, sir, you will see that our Q4 last year was really high. And when you are comparing my Q4 this year with Q4 last year, it's unfair to the COEX division only because Q4 last year was all-out pressure. People maximized production, thinking they were all coming out of COVID era and were really going to see super times. They produced so much Q4 last year and Q1 this year that Q2 and Q3 became tough for the white goods markets. Not because there was a sale. It was as much because they had overproduced earlier. And I think that much of that is now liquidated. And so you can see that production seems to be going up.
Got it. Fair enough.
I would expect it to continue. So when you are talking about the 15-month, 18-month time frame, I think much of the agony of the last year in the refrigerators market should ease.
Sure.
And again, let me also add, when I say agony, there were a couple of players who did very well, and there were a couple of players who, who had more pain, and that itself makes a difference. So it's not that people have stopped buying refrigerators. So it's strategy of each of the players that is material here.
Got it. And the other question is what, a lot of participants are trying to understand, given that our capacity on the BIEX will come through in, March of 25 and then March of 26. So broadly over last couple of years, despite being at, fairly peak kind of capacity utilization, you've still been able to grow the BIEX division. And some bit of it, as you mentioned, has come from the value addition. So out of the BIEX revenues, what percentage would be the thin films or the value-added films that you talk about? And once the entire capacity is on stream, what kind of optimum revenue throughput we can see maybe in about FY26?
Two things, let me tell you. The actual product mix is very, very sensitive information, which you will excuse me if I do share on a public, on a fairly wide
Absolutely.
call, right? And it's absolutely competitor sensitive. But that said, you're right. In the last couple of years, whatever material progress the division has made is through value added, which is coming from the value added product mix change, that is addition on of value added products. How this mix changes, we are gearing up capacity. On our new line, for example, we will definitely go down to sub 2. Now, how well the markets are, how much of market growth is there is a little debatable, but let me assure you that we see average price moving up fairly strongly over the next 2-3 years. And that is very, very material. So the trend of the value, the average price going up would definitely continue through the next few years. I mean, for example, if I look at, in 2021, our own average price was, I'm just throwing a number, but it would be close to that, would have been 260, 270 in that range. And it has gone up consistently to, I answered the question earlier where I said it's 450 thereabouts. So you can see that's in 2 years. Now, obviously, materials haven't gone up that much in 2 years. Much of that is product mix change. So without answering your question specifically, I'm giving you the feel of it that yes, product mix changes are critical to this segment going forward. And as you can see, even the existing average mix is a fairly rich mix.
Thank you. We take the next question from the line of Chinmay from Moneybee Investment Advisors. Please go ahead.
Hello, sir. Thank you for the opportunity. Am I audible?
Yes, you are, Chinmay.
Yes. So first, I might have missed that earlier in the call. Can you give us the production volume in the BIAX and COEX division for this year?
Sure. Just give me a jiffy. I just push that paper out of the way. So our total production for this year, okay. COEX was about 28,000 tons, 27,857, and BIAX was 3,635.
All right. Okay, and so one more question with regards to the value-added segment in the dielectric films. So the new capacity that is coming up, is the production for the thickness of the dielectric films is specific to the line, or can you explain a little more about that?
In all manufacturing processes, there is a range. So our current line, our averaging is around 5, 6 is averaging, and obviously we go lower, but we can go down to something like 2.75 on the average line, and obviously we can go up to 13, 14 micron. And if you take the new line, the lower end, which is the one that's critical, we can go down to a guaranteed 2 micron and possibly below 2 micron.
Okay.
And target is to be able to make 1.5 micron.
Okay. And so the last question I have is with regards to EV. So just want to understand what is the current total addressable market that you have in the sunrise segments, as you mentioned, in the EV and non-conventional energy.
Yeah, sorry, what about it?
Sir, what is your total addressable market in those segments?
These are new market segments, and I must emphasize that when we are looking at this new segment, we are not looking at this segment only in the country. We are looking at this segment on a global basis. Globally, we expect people who have studied this externally, carbon dioxide, people who have studied, expect that the volume requirement by 2030 would be something like the equivalent of almost 70, 80 lines like the kind we are thinking of. And obviously that many lines can't come up. So what we are really looking at is to address the global market. The market size globally is several times, in fact several tens of times, the capacity that we are looking at.
All right. And sir, is there any competitor in India which is planning to enter into manufacturing of dielectric films according to you?
Well, let me tell you, a couple of players have tried, somebody is trying very hard, but market acceptance takes time. I would not like to decry any producer. We are a producer ourselves, and yes, people are trying, I'm sure they'll try, and why not? But I don't see significant competition in the long run. And although I would emphasize that we would love competition because that actually brings out what we are better about and what we are all about. I hope that answers your question, Chinmay. Categorically, in other words, I'm not going to say anything plus or minus about anybody else who's trying to get into this segment.
Absolutely, sir. Understood. Thank you so much.
Thank you, Chinmay.
Thank you. We take a next question from the line of Vishal Prasad from VP Capital. Please go ahead.
Hi, sir. So last year, when I asked about opportunities in the export market, you had mentioned that we do export, but there is huge opportunity in domestic market. But now it seems we would be looking at export market. So is it possible for you to talk about what kind of opportunities do we see there, and if we are already working with some of the customers?
Okay. Good question, sir. Yes, the export opportunities are enormous. Now, again, the export opportunities come from existing markets, and export opportunities also stem from the sunrise segments, which are growing faster outside of India than in India, as you can well imagine. Having said that, even with our restricted capacity, we are working on export, and in fact, you will find that the exports, as I stated earlier in those brief points that I gave earlier, our exports from the BIAX division actually went up 6%. Small, but it went up because it was constrained by available capacity. So our existing customers are actually asking us for more supplies. Many new customers are talking to us about supplies. And even many of the global big players in this segment we have got our films approved by them for potential supply for their own markets when we have capacity available to supply. So we are working at it. We are ready once our capacities are in place. Obviously, I can't make a commitment to supply today when my lines are a few months away.
Right. And sir, you mentioned our capex would be 500. So 500 is for one line or both the lines?
I'm not going into the details of the capex, but let me tell you, each line's base cost would be a little over 250 crores on base cost of the lines. Of each line would be 250, so 500 would be base cost of the two lines put together.
Okay, so last question. I know now we are trying to go below 3 and below 2. So it's difficult to ask about.
I missed that last line.
No, I'm saying since we would be going sub 3 and sub 2, so the thickness will go down. So it's difficult to answer in terms of asset turn. But is it possible for you to just give a hint on what kind of revenues we can look at given the prices which are there today?
Suffice it to answer very simply that the asset turns would improve significantly over where they are. I think you would have seen that in the last 2 years itself on the same capex, you would have seen the higher turnover coming in from something like 60-70 crores. I think we've gone up to 160 crores in a couple of years. So that you can see what's happening to asset turns, right?
Right. Okay, sir. Thank you.
Yeah, sure. Thank you.
Thank you. We take the next question from the line of Pawan Torani from Citrus Advisors. Please go ahead.
Thanks for taking the question. So you said that, in the new lines, you could see the size going up to 2 micron.
Down to
2. So, sir, I'm just trying to get a sense of what could be the realizations that we could be expecting going forward. Because the growth that we have seen even over the last 1 year is a mix of both volume growth and primarily the growth has come from the product mix changes. So going forward, what if you have a ballpark figure of what could be the growth in realizations in the next 2 to 3 years?
I think essentially, sir, your question is the same as what the last gentleman asked. So essentially, it's the same thing when you're talking asset turns and you're asking what would the price go up to. So my answer would be exactly what I just said to the last gentleman.
Okay. Fair enough, sir. And sir, if most of my questions are answered, but if you could give a sense of, what's the sales or the EBITDA growth potential that we could see over the next 3-4 years with all your capacities coming on stream. that would be really helpful, sir.
You will appreciate that what you're asking for is really very, very forward-looking. And I think it would be in the best interest not to dwell on that.
Okay. Okay, sir. Thanks a lot.
Yeah, thank you. We take the next question from the line of Vikas Mistry from Moonshot Ventures. Please go ahead.
The opportunity. Bhaskar sir, I have a simple question that what are the capabilities which we are looking now and we wish to have 3-4 years down the line, and how much in R&D we are investing to go below 2 micron and below that, such that our value per head product will increase?
Okay. The way, yes, naturally, as you will well appreciate, constant research, constant development is essential in any high-tech industry. And so naturally we are doing it. But a little difference is the way we do it is much of our development is actually tied in with our plant and our operations itself. So it's not that we have built, that we would think of building an R&D center outside of it to do fundamental research. What we are doing is developing products aim towards value addition, aim towards meeting customer specific requirements, and aim towards making sure we are future ready. So I'm not going to attempt to give you an answer on how much do we spend on R&D, because a fair bit of spend is on R&D, but that would actually be lost in my plant expenses itself.
Okay. Second question is on the capabilities.
But rest assured that you can't survive in this business, which is a high-tech business, without constant development. And perhaps I must add that in the last, even if I take just last 1 year, I think from various bodies on quality, on development, on product performance, I think our division must have won up, and innovation, we must have won something like 15-16 awards. Sorry, Mr. Bakshi sitting with me is correcting me and saying we won 20 awards in the last year of various things, aimed towards these points which I am mentioning.
Yes, sir. That's heartening to see, sir. My next question is that let's suppose we have a 4,000 tons of line, and let's suppose you start producing a lower thickness from, let's say, 1 micron to half micron. Then
we are not thinking of 1 micron. It will be 1.5 upwards is what we are thinking.
Okay.
I mean, we aren't yet thinking of 1 micron. Who knows? Maybe the market will need it soon, but not yet.
Okay, sir. Just for sake, we can say that we are producing 3 micron. Then the amount of kgs will be lesser than when we produce 1.5 micron. Then the kg output throughput of the machine or line will remain same, and hence the total asset turn that can produce on the same line can typically double, or what is the correlation between all of that?
No. Any machine has 2 parameters which are important. One is what you called very correctly throughput. But another very important parameter is line takeoff speed.
Yes.
If you produce very thin film, then what happens is beyond a point, you can't increase the takeoff speed anymore, and you will have to reduce the throughput. So, of course, the value addition more than makes up for the fall in output. But if you have a line that, say, for argument, can produce 5,000 tons of, say, 6 micron, it can obviously not produce 5,000 tons of 2 micron. It would go down, but the value addition would more than compensate for it. Does that explain the answer?
That's absolutely, it will compensate. Does it increase by some factor 1.2 times or 1.3 times, something like that?
Okay. Yes, it will go up. It's not straight. If I got exactly the same number, then why would anybody take the pain of thinning? Thinning is a very tough process. It's a complicated process, difficult to operate. I mean, every problem you can imagine, including handling, is there. So yes, there are problems all around, not only for us. Even the user will have problems using when it's very thin, even to handle the web wherever he's putting it to use. But it is technically worth it, which is why people do that.
So, sir, my last question is on order what we have placed for 2 lines, but we have very high lead times of 4 years. Let's suppose beyond 26. So we are not even thinking to place the order for the next machine by the end of this fiscal year, because it will take another 4 years for us, and we have all blue sky scenario from our side, and the financing is also cheap, as you said earlier in the call. So what are we even thinking for that, for further expansion beyond 500 crores?
I'm not making a policy statement or an announcement yet, but yes, we are constantly thinking and working on those lines.
Okay, that's good to hear. Thanks a lot, sir. I keep doing the hard work and putting good amount of money into R&D. Thanks.
Thank you, sir. Thank you.
Thank you. Ladies and gentlemen, due to time constraint, that was the last question. I would now like to hand the conference back over to Mr. Bhaskar for closing comments. Over to you, sir.
Thank you, friends. It was a pleasure to join you all again and to understand your queries, your concerns. So once again, thank you very much for joining us. I would like to reiterate that we at Xpro are committed to consistently offer superior quality products backed by exceptional services to exceed customer expectations, aimed towards making us the industry leader in our chosen segments. Most important, we would strive to make sure that our investors and the investment community is satisfied with what we do and what we deliver. I hope I've been able to share information which is of some use to you. If you require any further details, please contact us or Orient Capital, or we look forward to you joining us at one of our next investor meets or otherwise. Thank you very much again.
Thank you very much, sir. Ladies and gentlemen, in case of any further query, you may write to irfan.rain@linkedintime.co.in. That's irfan.raeen@linkintime.co.in. On behalf of Xpro India Limited, that concludes this conference call. Thank you for joining us. You may now disconnect.